Hey guys, welcome. We're going to talk DraftKings today, and I'm doing this one because I think that there might be some potential here for a good entry point. DraftKings is, I think, a good company. The stock price has gotten beaten down a lot lately. Over the last month or so, these high growth companies, tech companies, have taken a beating, and I think it's creating some potentially attractive entry points in a number of stocks. So DraftKings is one of the ones where I want to take a look at it. I want to see if, in fact, that's true, if the price is at a point where we could consider buying. I want to see if the valuation is good. I want to see if the opportunity is good. Are these guys a good business? Are they in a good market? So I want to look at all of that stuff. I've put together a bull and a bear case here. I want to show you some points I've got on each of them. I want to give you my opinion on the wrap up, so make sure you stick around till the end. And let's take a look at DraftKings. Okay, so what's the story on DraftKings? So, they've been around a while. They started out in 2012. There was an initial focus then on the fantasy sports game because back then, online sports betting was not legal in the US. So they did that. They built up a fairly successful company in this fantasy sports league business. In 2015, they branched out into online sports betting, but in the UK, where it was legal. They did well enough at that. And then, surprise, surprise, 2018, the US Supreme Court lifts this general ban that they had on sports betting. And then that sort of opened the opportunity for individual states in the US to legalize gambling, online sports betting, iGaming, if they wanted to, and in ways that each state did want to. A lot of them did. And this absolutely created a gold rush opportunity, right, for companies that were close to this business, like DraftKings, to rush in, start grabbing market share like crazy. This attracted a lot of funding, a lot of investment dollars got poured into a number of companies that were in this space, and the race is on, right? So it's all about capturing market share as these individual states open up to these different online gaming opportunities, and most states are in that process, right? So if you look here, there's almost every state either has legislation, they're working on it, so there's somewhere along in the process. There's only 3, in fact, that haven't started the process yet. So, absolutely legalization is a thing. It's totally opening up. DraftKings went public last year in 2020 through a SPAC. To try to capture some additional funding to get some public equity, into the company to fuel the growth that they needed to try to grab this opportunity. They were valued back then at $3.3 billion in the SPAC deal, and now, just over a year later, the market cap is up to $18 billion. So crazy, crazy growth. People are super excited by the growth opportunity that this presents, because this is what it is, right? It's a brand new market that's opened up, right? So there's some really, really optimistic projections on growth and revenue and profitability for this entire market. DraftKings is seen as one of the leaders here, and so that's what's fueled, the drive in the share price from that SPAC IPO a year ago. The price has absolutely skyrocketed. So you can sort of see what happened here, from the early days in that IPO. It opened at around that $20 mark, I think, and immediately shot up, got as high as 72-ish. In mid-March, and then the bottom fell out, right? So this is when inflation started to be a concern in the market, and started driving a lot of the prices of these stocks lower. So for those that don't know, what's happening here is inflation makes the value of future dollars worth less, obviously. And so companies like DraftKings that are in their early growth stages have revenues many, many years out. And so that's what's going on here, right? So the value of those future earnings is now less, given that the market is anticipating a significant amount of inflation. And so that has caused this downward price reduction. And that really, it really kicks the company in terms of sentiment, right? So a lot of people see this, they see this price decline, that gets momentum going downwards. Other people start heading for the exits, and the price declines even further. What's interesting to me about the price action here is coming into this bottom near $40. We're starting to see the volume spike up again. There was a little bit of a recovery last week, quite a healthy bounce. And so this gives me at least some indication, I think, that the bottom could be in on DraftKings, or at least we're very, very close to it. So this does feel like a logical opportunity, maybe, given the price action, to take an entry point here. So now one other thing to understand about the company is that they actually have 3 lines of business. So they're into daily fantasy sports, online sports betting, or OSB, so gambling on the outcome of a game, and online casino gaming, sometimes called iGaming. So this is your online poker and all of the traditional casino games in an online format that you would actually play and place bets on. So all of these are driving revenue for the company. And all of them are potentially, pretty significant markets go forward. So, and remember too that all of those 3 opportunities can be in different states of legalization in a given jurisdiction, a country or a state, whatever it is. And so that's going to create some lumpiness, I think, go forward in terms of the expansion opportunities for DraftKings and companies that are in this industry. They're going to have to follow the legalization and the restrictions, or the lack of them, that are put in place in a given jurisdiction. So we're going to see some volatility in the market and in the revenue go forward. That's a fact of life for a company like this.
What's the upside potential?
Okay, so let's make a bull case here. So right off the bat, you have to look at this total addressable market. It's absolutely massive. It's around $67 billion, according to DraftKings. Some of the competitive companies are pegging it at similar numbers. So I think there's some weight behind that estimate of the TAM. I think that the TAM assumptions can be validated with some data from other jurisdictions. We can look at the UK and we can get some sense of what the opportunity is from there. Obviously, the US is not the same, but it's similar enough that I think the TAM assumptions have something behind them. And that's unusual, right? A lot of times we see some of these SPAC companies with these crazy TAMs that are based on hopes and dreams. This is not that. I think these numbers are somewhat real. That said, DraftKings is in a fight here with FanDuel. They're neck and neck probably in terms of market share leadership competition with FanDuel. Barstool Sports, BetMGM. There's other players nipping at their heels, right? So there's a real fight here in order to capture that market. But the market is massive, right? So I think there is a lot of room for multiple winners in this particular fight. Now, it's also important, too, I think, to realize that we can't easily call DraftKings a market leader in terms of their ability to capture this total addressable market, but they're absolutely at the top of the pile, right? So I like their position. I like the size of the market. Absolutely a big point in their favor here. Second thing is legalization, right? So the way this is happening is as these different states are legalizing, they're all putting different frameworks and restrictions in place and stuff like that. But every time legislation gets passed and opens up a new market, all of these players need to run into that market. They need to spend massively to acquire customers, and then the revenue follows from that, right? So, legalization is got a lot of momentum behind it, is absolutely happening. Like I said in the intro, there's only 3 states that haven't yet tabled legislation. I'm sure that's coming. Canada is probably going to legalize soon. There's a lot of talk about that, so that's only going to add to the total addressable market. And the reason I'm confident that legalization is on a good momentum here is it's an easy political win for governments, right? So nobody complains when you tax gambling. It's an easy income stream for governments to establish. They're hurting right now. Pandemic spending, deficit spending, budgets could use that additional income stream that nobody's going to argue with. So I don't see legalization reversing anytime soon. It is full steam ahead. And I think who knows what the future markets are here, right? I think as governments get used to regulating online gambling and iGaming and OSB, who knows where that's going to go, right? Are we going to see video game betting in a few years? I don't know, but I think it could absolutely be a thing. So I love the fact that this is a strong trend that's going to open up this market and potentially new markets go forward. So in the last quarter, there was some pretty good news when DraftKings bumped up their forecast by about 16% on revenue. So the revenue target is now just over $1 billion. I think it's 1.05 to 1.15 billion in revenue. That was accompanied by a strong increase in monthly unique players. They are claiming a 44% increase in the last quarter across those lines of business on aggregate. So these are new people that are coming in and continuing to play, and those are the folks that are driving those increased revenue numbers, right? So I love the fact that growth is not slowing down. I think there was some concern that, as reopening happened, as the lockdowns were lifted, we might see that, but we haven't seen it in the last quarter. That gives me some confidence that we are not going to see a slowdown and we're only going to see additional growth go forward. So that's really, really bullish for these guys. They have a lot of partnerships here with different leagues and team deals and things like that, and they're now an official sports betting partner of the NFL. They're one of 3 companies that have that deal. So this is all good. Number one, it legitimizes the gaming and the gambling aspect of the business that they're in. But really what I'm excited about here is that this allows them to integrate NFL content into gaming products and promotional materials and that kind of thing. So there's a lot of synergy here. The downside is that if games don't happen and if there's further lockdowns in the short term, then it sort of crimps their ability to, capitalize on that partnership. But that's a thing of the past now. So going into the next few quarters, I think we're going to see that NFL content drive a lot more eyeballs and a lot more participation, and hopefully a lot more revenue that goes into these guys. And the last thing is a nice little add-on to that as well. So they have this new social feature that they're rolling out right now in the apps, and so there's this strategy to build an online community. And sort of a social aspect to these fantasy leagues in particular, and OSB in general for that matter. I think this is fantastic. In my own experience with these fantasy sports leagues, I think that's the thing, right? It's getting these people to develop these strong communities where everybody is chatting online about the bets that they're making and all that kind of thing. That draws in new people, and it makes the business a little bit sticky in terms of people don't want to leave those communities and want to continue to participate, and the cost of maybe the losses that they're incurring is not such a big deal because they're a part of that community. So I love the innovation here that DraftKings is doing. I think it's really awesome, and I think this could be super powerful for them go forward. And I like the fact that I'm not seeing this in the competition. Really good news for these guys.
Let's talk about risk.
Okay, so let's look at the bad news and try to build a bear case here, just for comparison's sake. So I think I mentioned it where the reopening play here, money is, I think, rotating out of lockdown stocks. I think that DraftKings was seen as a lockdown play. People are at home, they have excess cash that they can spend on stuff like iGaming. And so, there was some fear, I think, that some of the past revenue numbers was driven by that. But now lockdowns are lifted, people are getting back out, they can spend money elsewhere. So are we going to see a drop in revenue? So the thing I'll say about this is I do think that's a thing, but I think the news is out, right? So whatever decrement that these guys would have seen in terms of monthly unique player growth has already happened, right? The news is out. I don't think it's going to get any worse from here on in. I think if there's further money that rotates out of DraftKings as a result of that, I think it's making the wrong decision, because I think in the next few quarters, we're going to see a stabilization of that, and that reopening effect is not going to be present in the next few quarters, right? So I think that has happened. I don't think it's going to happen in the future. So personally, I tend to discount this one, at least in my own analysis. Point number 2 here is the competition. So I talked about FanDuel, Barstool, BetMGM. Those are the big guys. There's tons of other smaller players out there that are all grabbing their own little piece of that massive total addressable market. So it's not like DraftKings is out here on their own. It's also not like DraftKings is a clear leader ahead of everybody else. I think they're neck and neck with a lot of other players. So from a competition standpoint, I would like to see them further out ahead of everybody else with more of a competitive moat. I'm not really seeing that. I think the competitive moat that they do have is brand recognition and that loyal customer fan base from the fantasy sports leagues and things like that. That's good. I'm concerned so that it's not enough to really keep the competition at bay, especially given the fact that casinos are moving online aggressively. They have deep pockets. They can spend. They can acquire. So this is going to be a real big fight that DraftKings has on their hands in terms of having to spend and in terms of having to outspend the competition to acquire players and to retain them with new features and promotions and all that kind of thing. It's an expensive game, right? So I'm really concerned about the competitive fight these guys have go forward. Okay, the third thing here is what's happening with their expenses. This was the big news in the last quarter, where they released their numbers and expenses went up by about 5 times. Earnings took a big hit, a big miss in terms of earnings. I think it was half what they were expecting, or the loss was double what they were expecting. So, there's a good reason for this, right? They're spending aggressively to acquire customers in a brand new market, and they're making the point to say that there's payback for this, right? So the payback for customers is absolutely there. So they're confident in their spending that they're doing to actually acquire these customers because they're actually going to spend with them, and it's it's necessary in these new markets. If they don't aggressively spend, the competition will, and they'll be locked out. So yeah, I get it. They have to spend this money, but what it means is that investors are going to see those earnings misses into the future, and I think this is a problem for the profitability of the business go forward. I think if we see this in the next quarter, investors are going to be similarly disappointed. And if we were to buy today and that bad news continues, that's not a great story. And the last point I'll make here is profitability and what it means for the valuation, right? So, given the fact that they're spending so much, that pushes profitability further out into the future. It's going to be longer. It's going to be a longer time now before they actually are making money. Every quarter, the loss is widening. Earnings are negative now, and again, like I said, investors are absolutely going to lose patience with that if it continues, right? So, given the projected sales growth in that case, and given the rate at which they're spending money, we need something like about 5 years to grow into the current valuation of $18 billion. That's a long time, right? So between now and then, if everything goes right, waiting that 5 years to grow into the current valuation, I think there's a lot of downside risk to the price if that's how long we need to wait here. So really, I think in order to mitigate that downside risk, something needs to change. We need to see decreased costs of customer acquisition, or we need to see increased revenue, right? There needs to be something that changes or increases these projections to try to get that growth a little higher, or that something else needs to happen to control costs and get them down a little bit. So that's what I'll be looking for in the next quarter here, is some better news on the profitability front to try to justify this valuation. Okay, so what's the summary? Look, the bull case is all about this brand new market. It's massive, $67 billion. DraftKings is, like I say, right at the top of the heap. They're competing with the best out there. They're going to get a big chunk of this market. That's fantastic news, and this is a really, really strong growth story. The bear case, though, it's based on time to profitability. It's based on the current valuation. Whether that makes sense or not, I don't know, but I think there's a lot of risk that investors are going to continue to lose patience in the short term with that profitability number, and I think that creates further downside risk on the price. So given that imbalance, I think, between the risk and the reward, this is one for the watch list, and that's how I'm going to play it. I'm going to stick it on my watch list. If I see a further dip of any significant size, then I'm going to take a closer look, and so it's all about a question of how low that price is going to go. Every time it dips, it makes this company more and more attractive to me because I do like that long-term growth story. So I wouldn't buy at this price, but like I say, if that number gets lower, I probably would look at taking a position at that point. So anyway, guys, that's my story. Please throw the video a like if it helped you out. Don't forget to subscribe, ring that bell, and I'll see you in the next one.